Tisha, huyu Mark ni wazimu. Utakubaliana na mpango wangu, si ndio?
Bora usikuwa umehonga huyo daktari. Bora usikuwa umemhonga.
Usiwe hivyo. Mimi nimepunguza makali sasa.
Nakujua. Nakujua wewe ni mwangu, nakujua.
Good morning everyone.
Karibu Peter.
Asante sana.
Baba Felix, mkuja wakati mzuri sana. Ndio karibu tunaanza kula breakfast.
Asante sana.
What caused you to say hello, you know?
Kuna shida?
Good question.
Mbona tu behave kama tumemisiana sana na huwa tunaona hapa kila siku?
Why always this cranky? Why do I even bother?
Where's Daktari?
Fiona has a session today.
You know what I'm asking?
Sisi wote tuko na huzuni. Na tusipochunga, huu huzuni utatudhuru mpaka afya zetu. I have already lost one daughter. I do not want to lose another one over petty family wrangles.
Mimi hata mnipendi.
Jane, umeshinda ukisema hiyo kitu muda mrefu sana. Wacha nikwambie saizi na nikuhakikishie. Sisi ni wazazi wako na tunakupenda sana, tena sana. Sawa?
Mom, I know I didn't say this, but I'm sorry that you lost your favorite daughter.
Jane, I thank God that you're still here. And it is well with my soul.
I wish I could have spent more time with Joyce so I can make up for all the fights.
Ndio. Na ndio maana nafikiria afadhali tuamue kuishi na amani. In honor of her memory. You know she was a very peace-loving person.
Okay.
Na nisiwahi sikia ukisema haupendwi tena. Please, please, Mom.
Enough of me. How was the breakfast?
Breakfast ilikuwa tu sawa, lakini kama ziwa tu. Kama ziwa si umetupimia?
Si unaona ni wewe unapenda kuwa negative.
Hapana, sio hivyo Jane. Najua tu vile niliwalea, niliwafundisha kupika vizuri. Lakini tangu uende hiyo ng'ambo, mimi sijui mambo ilibadilikia wapi.
Wacha Sally arudi. Hata mimi nimechoka.
I put a spell on you. Cause you're mine. You better stop the things you do. I ain't lying. No, I ain't lying. You know I can't stand it. You're running around. You know better, Daddy. I can't stand it cause you put me down.
Imagine a future where you can enjoy the fruits of your hard work without financial worries. A time when you can truly relax, travel, and pursue your passions. To achieve that dream, you need to plan today. With the cost of living constantly rising and inflation showing no signs of slowing down, the money you need today will be nearly 10 times higher by the time you retire. Without a solid retirement plan, you risk financial insecurity when your active income stops. That's why saving for retirement is necessary. Regardless of your age, it's never too early or too late to start planning. Engage with experts from any RBA registered individual pension plan for guidance in tailoring a retirement strategy based on your current lifestyle, future goals, and desired retirement age. This provides the fixed regular income you'll need after retirement to ensure you live comfortably without compromising your quality of life. The earlier you start saving, the more secure secure your future will be. Start saving for your retirement today and live your golden years the way you've always dreamed. For more information, visit our website www.rba.go.ke, call our toll-free line 0800 720 300 or email info@rba.go.ke. Secure your future. Secure your peace of mind. RBA, safeguarding your retirement benefits.
The global reinsurance industry is reaching a tipping point, with more companies focusing on more strategic markets. And the Kenya Insurance industry, or the Kenya Insurance Corporation, is one of the oldest insurance companies here in Kenya, and it is also focusing on more markets. What is driving this growth, and what is the strategy behind the renewed push to reach more markets? I'll be talking to the CEO of this conglomerate. It has been around since 1970, and of course we'll be discussing the journey and the milestones that it has covered to get to where it is. Plus, we shall be looking at the Kenyan market, the African market, as well as the global market. You're watching Inside Government with me, O'Brien Kimani. Thank you very much indeed for joining us. At O'Brien Kimani is my X handle, and of course at KBC Channel 1 is our Twitter handle. I told you I'm joined by the CEO of Kenya Reinsurance Corporation. He'll be giving us a blow-by-blow account of what the industry is, or what is shaping the industry, and of course, where the market is going from here. Thank you very much indeed, Bwana CEO, for joining us tonight. Give us an update of how the market is looking like.
Thank you so much again for inviting me to this session. And again, thank you again for bringing to the public interest on reinsurance. So currently, the global reinsurance market is actually improving quite a lot, partly because of public awareness and of course increase in the size of risks that insurance companies are handling. And of course, because of so many changes that are happening in the market, specifically climate-related, natural catastrophes, and the volumes of businesses that are being handled globally, calling for need for insurance right now. So volumes are also going up, but so also the exposures. And currently we are seeing growth again in both likelihood and severity of the risks that are coming to reinsurance. So locally, we have seen a better performance compared to prior years, especially in some classes of business. And we can say we are seeing improvement in profitability of reinsurance business compared to prior years. And this is mainly because of appreciation of better underwriting practices. So with more awareness, we are seeing better risk management. And with that also better profitability. So the space is improving, I can say.
You have been at the helm of Kenya Re for the last 4 years.
Yeah.
And you came at a time when COVID was wrecking the global insurance order. You know, companies were paying hefty bills because of this, or because of COVID-19. Tell us, how has the market turned around?
A very good question again. Unfortunately, we are seeing a re-emergence of COVID. We are monitoring cases coming from Asia. But let me say the world emerged stronger after COVID. During COVID, we had seen a lot of businesses collapsing.
Yeah.
And with that, a lot of contagion from the pandemic. But post-COVID, a lot of recovery because of resilience that is brought to businesses from insurance. Okay, so after COVID, we had a time lag of a year or so, and after that, it was all systems go, better results than even pre-COVID time. Again, a testament of better risk management by some entities. But some collapsed and were sunk forever. Okay, but as I've said, we are monitoring cases of rebounding pandemic. But again, as I've said, very remote, rare occurrence of some events, but when they happen, okay, the impact is quite major. So we are seeing now that spiking also. Probability of major loss events now increasing. They used to be rare. Now all of a sudden, because of the climate changes, we are seeing a spike of that, what we call natural catastrophes. Yes, so again, that is putting at stake the profitability of insurance markets across the globe. Yes.
When you look at Kenya Re, I mean, for a company that has been there now for 55 years now,
years.
I mean, there's a lot that is at land within that space. What would you say has been the biggest lesson that Kenya Re has learned that is going to apply in the next 50 years to become bigger, bolder, and better?
We have learned a lot. So Kenya Re, maybe for history, was set up in 1970. We got the first business in 1971. Then fast forward, in 2007, we went public.
Yeah.
We did our first IPO. Then in 2010, 2011, we opened our first subsidiary in Ivory Coast, Abidjan, where we still have physical staff members with the Kenyan representation. Then 2015, we opened another subsidiary in Zambia, Lusaka, again with the Kenyan representation. And when I say Kenyan representation, I mean we have some Kenyans working there, but also Kenyan board members sitting in those subsidiaries. Okay. Then in 2020, we opened in Uganda. Okay. So the initial lesson was these subsidiaries were loss-making for quite some time.
Yeah.
And others, we went to markets with no clear exit strategy. So it has been a struggle to turn them around. I'm happy to tell you that all of them right now are profitable.
They're making profit.
They're making profit, all of them.
Were they non-profitable because of poor strategic decisions, or the markets were not favorable at that point?
It was mainly because of culture. So when you go to Ivory Coast, for instance, that is a francophone, a French-speaking block, trading block called CIMA. And again, when you don't appreciate culture, it actually offsets your strategy. Okay? Then in other markets, we didn't have a better grasp of the terrain. But over time, and with a lot of data sets, you now manage to improve your strategy over time.
So it's proper to say that at that point in time, no proper market research was done to try to understand the issues.
It was done. We don't open a subsidiary without doing proper feasibility study. Okay, but that is desktop. When you go to the ground, reality is hit hard.
Yeah.
Because you can plan a lot, but when you miss out that very specific, item, most likely qualitative, not quantitative, because most likely you have out of quantitative data sets, you find all that you did can be eroded by a qualitative force like culture.
Yeah.
Okay. Then again, you find a lot of volatility and changes in regulation, and again, business dynamics in territories that we are not familiar with. Okay, because before opening these subsidiaries, we were operating in these markets, but through brokers. But when it comes to your time now to physically set up there and go directly, access the clients directly, now reality strikes home. Okay, we have learned our lessons, and we are using those lessons going forward because we have intentions to open a subsidiary in Tanzania. You have intentions to open a branch in India. Okay. Then you're also exploiting markets in South America, in South Africa, either Mozambique or South Africa itself. Then again, the CIMA region to set up a branch to support the subsidiary. Now, India again, we learned our lessons. We paid billions in agriculture claims, and as we look back to going back to that market, we know what to write in that market. So we are better off, okay, post these losses. We are better.
You're also planning to re-enter Tanzania because you were there at some point?
Tanzania, we've been there for many years, but we have not left that market. There are some new regulatory requirements that we must physically set up. Okay, so currently we do business from 84 countries, but you rarely have a regulator requiring to physically set up. Because reinsurance is an international business. So the regulations in Tanzania are basically domesticating reinsurance, meaning you must physically set up there. So what we are trying to do is
you must have a physical presence in Tanzania.
In Tanzania.
Like the way you have in Zambia, Uganda.
Yes.
Very well.
So that is what we are trying to do there. But we are still doing business there.
But you have physical presence in 4 countries?
Yes, we do. We have Kenya as our head office. We have Ivory Coast, Abidjan. We have Kampala, Uganda, and Lusaka in Zambia.
And now you're planning to have physical presence in Tanzania?
In Tanzania and India.
And India.
Which
part of India?
Specific location, Agif City. It's like an EPZ, mainly because of the tax benefits and other benefits that come from setting up there.
What is so interesting about India that you would want to be there?
India...
Because it's a very highly competitive market with more than 1,000 reinsurers.
We have... Kenya has an interesting history with India. So way back in 1971, when we got our first business, our first treaty, it actually came from India. Okay, and our initial underwriters went for training in India. That means our software foundation, our underwriting philosophy, is mainly influenced by Indians. So we've been in that market for decades, over 30 years.
Through brokerage?
Through brokers, a lot of brokers. But we have decided to go back to that market and have a physical location that we will not only serve India, but the wider Asian market. The reasoning is we are in Nairobi trying to serve a market like a country like Vietnam, a country that is almost half day away. Meaning for the better part of almost the whole year, you rarely give attention to that client. And we reasoned if we set up in India, there is a lot of benefit. The first thing is in that space, the gift city, you enjoy some tax break for like 20 years. Then you also write business in international currencies, not the rupee. So you'll be having a collection point for Forex. And of course, you'll be able to repatriate that back home. And of course, with that, we should be able to support government agenda, the bottom-up agenda. Then besides that, from India, we are able to reach almost every other country within Asia in a span of like 3 hours. Right now, we are far away from our clients. So the reasoning is setting up there will come without benefits. Lastly, India is a very liquid market. They don't have challenges with payment. So whatever we write there, we are able to collect. And as I've said, we have learned our lessons. We made hefty losses in that market. So we are going back there to just write 2 classes. We are very clear. It's not a subsidiary, it's just a branch. Just picking 2 lines of business that we are seeking in that market.
Which lines are these?
That is part of our strategy. Okay? But from that market, from those 2 lines only,
because you are very heavy in agriculture.
Yes, and we serve.
And you burnt your fingers in that market.
We are not touching that agriculture.
You're not touching.
We are not touching it. But from the 2 lines we are targeting from India, we look forward to writing between $50 to $80 million per year.
$50 to $80 million per year.
In revenue and retaining more than a quarter of that in terms of profit.
So you're looking at between 5 and 6 billion Kenya shillings?
Yes.
Annually?
Annually, in terms of revenue. Okay? But in terms of profit, we are saying we target minimum 1.5 billion net coming from that market.
Kenya shillings.
Okay? And as I say, the beauty with India, this is a very good paying market. The 5 billion to 6 billion you'll be writing, we'll be able to remit that back home. But again, when you look at the vehicles available in that market for investment, they might be attractive enough to invest there and they repatriate the surplus to Kenya. So those are the dynamics that we have to balance. But it's a very attractive market.
When you look at statistics from the International Association of Insurance, I mean, they say that the prospect for growth in the reinsurance market is going to be driven by Asia and Africa. That's because that's where the market is highly underdeveloped, and especially here in Africa. And so, what is your planned for the African market?
Again, a very good question, Africa is our gem, our jewel. 80% of our net profit comes from Africa. Okay? So Africa is a very profitable market.
And you're operating in how many markets in Africa?
No, almost all countries.
Almost all countries.
Our retrocession protection, retro protection covers the entire Africa. Okay? So we are in all countries in Africa. And,
the 54 countries.
Yes. And we look forward to understanding some pockets of big volume, but very low margin countries like DRC and South Africa.
Yeah.
Okay, because we don't want to burn our fingers. Okay, but Africa, as I said, informs 80% of my bottom line. So when we say we want to open in Tanzania, or Senegal, or DRC, or South Africa, or Mozambique, depending on the outcomes of feasibility studies, is to give more attention to Africa. So Africa is a market we want to defend. So there's a market you would want to defend. There's another one that you would want to enter or re-enter. So this is a market that we are defending, okay? Because we understand the terrain better than any other international insurer. Okay? So we first of all dominate this market as we seek ways and means of entering Asia. We are also on pilot basis getting some business from South America.
South America.
Very little portfolio.
Which market
around,
specifically?
Brazil, Chile, a little volume, around $200,000.
$200,000.
Very little volumes. And this is to just understand that market. Okay? So eventually, when we get a better grasp, we can dive deeper into that market. But for now, we are very careful, very cautious. Okay? We are doing this from our own capacity, just to understand the terrain. And again, limited to only property. Only.
Property.
Okay? Yes, because again, we are not convinced from data sets that we may fare well with other lines of business in newer territories. Okay? So traditionally, we've been doing very good in property. Okay? And maybe to give you a hint again, even that India, that might be a target because it has been a very profitable line for us. Okay? So again, on case-by-case basis, we may take like 2 years or so before we make a decision for that on that market. So besides just taking this, we are gathering a lot of data sets from that market.
You say that the African market contributes about 80% of your bottom line.
Yes.
How much is this in real figures?
That should be around 3.2 billion upwards.
Kenya shillings?
Yes, from
per
Africa.
month. Per month, you say?
Billion.
Oh, billion.
Yeah.
And so when you have a situation whereby 80% of your market is concentrated in one area, isn't that too much risk because you're putting so much, too many of your eggs in one basket?
Not really, because I never say the business is concentrated. I said profit.
Profit.
Okay? So reinsurance is a business of diversification. So when you hear we are going back to India or South America, these markets may not be profitable, but you are diversifying your risks. Okay? So you find there are some pockets, some locations like Africa, where you may be thin on volumes, okay, but quite wide on your profit. Okay? So you defend that as you try to now push other frontiers that may not be that profitable. Yes.
When you look at, the plan to go into Tanzania and India, I mean, they have been pending now for quite some time. Do you have your mind made up when you're going to pop the balloon and open your offices in Tanzania and India?
Again, a very good question. Opening a physical location needs a lot of approvals. From, of course, your own government, regulators, both sides, and also shareholders. Okay? A decision to open a subsidiary, okay, needs management approval, board approval, shareholders approval. Okay?
And I believe you have all these.
We are almost there. We are almost there because in a matter of days you'll be having an AGM, and in that AGM we'll be seeking a resolution to open in Tanzania as part of the regulatory requirements in that market. Yes, yes, yes.
India?
India, again, we have internal approvals, okay? And we are waiting for approvals from the other side, okay? So we find there's
From the Indian government?
Yes, yes. So we find there's a lot of dynamics that goes into this. So our mind is very clear. Our mind is very clear because, again, we make a lot of data-informed decisions at Kenya. So if you look at data, and for these two markets, remember for these two markets, you've been there for decades, over 3 decades. So when data says it's right, and your experience on the ground confirms the same, then you have no doubt. We have no doubt that we're opening.
When you look at the reinsurance business,
Yeah.
what is shaping this industry currently?
Maybe the beginning point is understanding the nature of reinsurance. Okay, so our core business is accepting, okay, and selling risks in terms of contracts. So an insurance company, okay, will insure you, but if your sum insured, okay, needs further protection beyond their capacity, they come to reinsurance. Meaning, we give capacity to an insurance company, okay, to write bigger risks or risks beyond their balance sheet. Now that comes to us in forms of contract, okay? And again, there is a risk that can come to us that is also bigger beyond our balance sheet.
Yeah.
And we seek a bigger brother called the retrocessionaire, okay? So what is informing this business is basically the growth and dynamics of economies globally. As I said, if you look at Kenya's outreach, we are in 84 countries right now, okay? Meaning we constantly monitor any major economic development in those countries. So if there is, like what is happening in Kenya right now, okay? The government focus on housing, on universal health, on infrastructure, okay? That will generate a lot of insurance business and by extension, a reinsurance business. Okay? But if you go to economies where there's nothing happening much, most likely what you'll be having in those markets is just a renewal of existing businesses. Okay? So the key driver here is economic development. Then second, there's the issue of awareness. Okay? That people are aware that they should be reinsured. And with that, you reduce what you call protection gap. That you are just seated there, not aware that you should be insured, but from awareness, you are aware that I can insure. So you go take an insurance cover. And that, by extension, can come to us. So awareness, but also economic stimuli, okay, for growth. Okay? Then, of course, globally, we have a lot of access to information right now.
Yeah.
So we can say technology, and that very fast movement of information globally is generating some interest. Lastly, okay, what is happening externally, beyond our borders, is a realization that entities like Kenya, governments like Kenya, are quite ahead of time, okay, in setting up Kenya Insurance. So one of the mandates of a reinsurance company, especially a national insurer like Kenya Re, is actually to contain capital flight. Okay? So if you set up a reinsurer like Kenya Re, chances are very high that you can be able to contain your forex. Okay? Because countries lose money when you export money. So for instance, if you never had a national insurer, it means the local insurance companies will be seeking reinsurance services outside Kenya, meaning you are converting Kenya shillings to dollars or euros and exporting that. But now you have Kenya Re. And we are saying, if you have this premium in Kenya shillings, Kenya Re has capacity. You don't need to convert and take it elsewhere. So again, you find now emergence of national insurers everywhere. And with that, we are seeing our international portfolio, okay, shrinking. Because majority of these national insurers are coming with the legal protections. Okay? So case point is our neighbor here up north, Ethiopia. They never had a national insurer. So they set up one, and they say this one has protection to get X% of business. This is not available to any other person. Meaning we had that X competitively before they set up. But after setting up, that is gone. Okay? And we are also seeing a lot of protectionism elsewhere. So you find many countries, again, like Tanzania, what they did is to say you cannot export reinsurance.
Yeah.
It has to be domesticated. And if a reinsurer wants this business, they must have come here and set up physically. They are trying to control their forex and capital flight. And that is also threatening our business.
When you look at the Kenyan market, I mean, it has multiple players. It's not just Kenya Re. You know, you have Allianz, you have Swiss Re, you have Zep Re, you have Africa Re. What position do you hold in the market, in the insurance business market in Kenya?
We can say we are among the most significant players in this market. Because, for instance, the insurers you have mentioned, I don't know whether you know, Kenya Re owns up to almost 20% of Zep Re. We also own 5% of Africa Re. Okay, and when you look,
and Africa Re is the biggest in Africa.
Yes, yes. So we own 5% of that, and around 20% of Zep Re. And Zep Re again has a wider coverage because of COMESA, meaning by extension we are able to access other markets through them. But we also enjoy, okay, a very huge, okay, allocation of business because of being a national insurer. So by law, we enjoy what we call mandatory cessions up to 20%. Okay? The other players that you have mentioned, some have, but below. Some at 50% of what we enjoy, others at around a quarter of what we enjoy. So we can claim that we are among the most dominant reinsurer players in this market.
In this market.
This is our domestic market.
And of course, I mean, the fact that you've been around longer than most of the other players in this market, it means that you understand the market very well.
Yeah.
And also you carry the confidence of the market.
Yeah.
Very good. I mean, when we come back, because we are taking a short break, our first break, I would want to find out from you, I mean, when you look at Kenya Re, it's one of the very few government-owned entities that have persistently been paying dividends to the government.
Yeah.
I think you did 1.8 last year?
We did 800 million.
800 million.
Around 864.
864 million shillings.
The payouts.
We'll be coming back to find out from you how have you been doing these, and what can other state-owned institutions learn from you. Very good. I mean, we're talking to Hilary Washinga. He's the managing director at the Kenya Reinsurance Corporation, joining us tonight to help us understand the business of reinsurance, what is shaping this critical industry, and of course, the way forward. You're watching Inside Government. We're coming to you live from our national headquarters here at Kenya Broadcasting Corporation. O'Brien Kimani is my name. We're taking a short break, and thereafter
nataka unifunze tafadhali. Nataka nijifanyie mambo mwenyewe, nijione kama mume.
Sitaki kuona hapa tena. Sikujua una tabia ina hii. Tabia ipi? Umalaika wako umefikia kikomo.
Umefanya nini?
Wewe ni nani?
Mlongo Halina, rafiki wa pili. Nani mwenzangu?
Na kuonya usipotoka kwa hii nyumba utalala mbali leo.
Samahani mzee kukusumbua, lakini nahitaji msaada.
Lakini mimi namtaka.
Najua, lakini haiwezekani.
Hata kama iwezekani itabidi iwezekane.
Hata wazazi wake hawataki kulisikia jina lako.
This Father's Day, tell us why your dad is your hero. Is it his strength, his kindness, or his bad dad jokes? Post a 1-minute video sharing what makes your dad unforgettable. And you could win a one-night staycation at one of these hotels: the Fairview Hotel Nairobi, the Best Western Hotel Upper Hill, or the Holiday Inn Nairobi. Simply tag your 1-minute clip at Y254 on X, Facebook, and Instagram for your chance to win. Choose one of these hotels to also tag in your post, and you could spoil your dad for a night at Holiday Inn Nairobi, at Fairview Hotel Nairobi, and at Best Western Upper Hill. Don't forget to use the hashtag MyKBCDad. Let's celebrate our heroes in style.
Well, the reinsurance business is changing, of course, because of a global shift in various things. And of course, one of them has been the COVID-19 and as well as the artificial intelligence. And that's why tonight we are focusing on the reinsurance business, and we are talking to the Kenya Reinsurance Corporation Managing Director, Hilary Washinka, Doctor. And of course, he's getting us on this conversation and of course, helping us understand how the markets are shaping up. Before we went for the break, I just wanted to find out, you told me you paid about 840? 864 million Kenya shillings to the National Treasury, which are dividends. I mean, this is an institution giving back to the government. It doesn't happen with many government institutions. I mean, when you look at the more than 200 government-owned entities or where government have shareholdings, government doesn't end up getting a lot of dividends. So how have you managed to be doing this consistently?
Okay, let me start by correcting you. So our total dividend payout stood at around 864 million.
864.
Remember, we have 40% shareholders. Okay?
40 are private.
That have bought our shares through the stock market, the Nairobi Securities Exchange. 60% now belongs to government.
It goes to the government.
So we were among the few entities that complied with presidential directive to distribute up to 80%
of your profit.
Of our profit. And when president says you do something, we do it. Okay? So we fully complied with that directive. And of course, you take what is distributable, 60% of that, no, 80% of that, then you allocate the 60%. So what went to Treasury was above $500 million, okay? And that was the case for the past many years since we issued IPO in 2007. We have never failed to issue dividends. Even during COVID, we still issued. Okay? And this is just a testament to the resilience of Kenya Reinsurance Corporation. Okay? We are solid security. And again, our focus, unlike other entities, our focus is so much on the bottom line. It's all about what is that shareholder taking home. Okay? And among the largest shareholders, of course, is the government.
Yeah.
So deliberately, day-to-day, what we do, we have that at the back of the mind, that at the end of the year, okay, we have a demanding shareholder and also other expecting shareholders in millions that we must put a smile on, okay? And for that, we do conscious decisions, okay? I'll give you an example. In India, we used to receive like 5 billion in agriculture premium every year. And that would really drive our top line. And we made a strategic withdrawal from that market, sacrificing 5 billion that would get out of Kenya 7 to 8 billion, okay, in losses. And we said, let us forego that. And of course, that brought some haircut on our top line. But if you look at our bottom line, it was magical, okay? If you look at the past 3 years, our net profit, okay, moved from 3.5 billion, jumped to 4.9 billion, okay? A very slight drop to 4.4 billion in a year when we made forex loss of 1.6 billion. meaning if you were to add back, it would have gone to 6 billion. Okay? So ours is a very deliberate, okay? Deliberate action informed by profitability. But we also balance this with other things, okay? Besides giving out dividends, we also comply with other presidential directives like tree planting. You always find my team going to plant trees, for instance. Okay? We're also big on the corporate social responsibility. I'm sure you've seen our CSR program, Nicofiti, giving people with disability wheelchairs. I think earlier this year you saw us donating equipment worth around 14 million to the National Police, okay? Because our performance and our social contract with the public goes beyond money, okay? And to cater for all these things, okay, we have decided to go very big on ESG. And from there, we decided, why don't we consolidate all these efforts through a foundation, Kenya Re Foundation, okay? And we are happy that the board agreed to this proposal. So again, as a listed entity, we are expected to use 1% of our profit, okay, to do these social activities, okay? And we have a budget of now 2% of our profit for these activities. Meaning when we throw this into the foundation, we'll be having latitude to invite other people, other agencies, and fundraise to have a wider impact, okay? For instance, the impact we have had with Nicofiti since we started like 10 years ago, is we have given people with disability, okay, more than 12,000 assistive devices, more than, okay? And we are saying, if you think about operating a foundation with 2% of our profit and other people joining hands with us, it means we can even do this beyond the borders. Because of course we are attending to 83 countries.
Let's talk about your ratings.
Yeah.
About 8 or 7 years ago, you received some downgrading.
Yeah.
Based on the business environment back then. I know you've been trying to have conversation with rating agencies to try and improve this. Have you made any breakthrough?
The main cause of the rating downgrade from B+, good, to B fair, was mainly because of the huge losses we suffered in Indian market. Okay? And the commitment we made to AM Best specifically is we will turn around the performance, okay? Make profit from the core business. Maybe it's good to confirm to you, those 7 years ago, and for many years, we were mirroring the performance of the insurance industry. The insurance industry at that time, okay, was rarely making any profit from the core business. The profit was informed by investment activities. So we give a commitment to the AM Best that we are going to turn around performance of the core business. And I can say for the past 3 full years, back to back, we've been making profit. Okay? And I'll tell you maybe a highlight of last year's performance. Our underwriting profit moved from around 677 million in the prior year to close at 2.9 billion. That is underwriting profit. And that was the highest by an insurance player in East and Central Africa. Okay? And we agreed with AM Best they need to revisit the rating after we keep our promise on back-to-back, year-on-year, continuous performance. Okay? We are happy to tell you they are coming for a rating review next month, and we have hopes. We have high hopes of a rating upgrade. Last year we had been given a lot of hopes. Unfortunately, the day of rating is when we had Gen Z protests. And again, that raised the issue of political and economic risk that we are facing in our domestic market. So conditions are ripe right now, and we pray nothing changes. When they come for this rating in July, we expect a better performance. Okay? If you look at the way they look at this rating, okay, they've been centering their efforts around ERM, enterprise risk management, as a pillar. And the key determinant factor there was on the underwriting practices. That just like the people you are reinsuring, you are also making losses from your core business. So what is your core business? Is it investment or reinsurance? And we have proved to them for 3 consecutive years, and even this year, if I were to look at Q1 performance, okay, is that back-to-back, year-on-year basis, we are making profit from the core business. Now, we have not abandoned investment income. Okay. Again, if you are to look at 3 years ago, full year, our investment income again has grown from around 3.9 billion to close at 5.6 billion last year. Okay. So again, it's about moving the 2 drivers of revenue. Our revenue is a combination of 2, investment activities and underwriting activities. Okay. If you are to look at the performance last year, those 2 went up by 112%. Okay? 112%. But that again was offset by a huge foreign exchange loss of 1.6 billion. And that is what dragged our profit to around 4.4 billion. Okay? Yeah. We don't again expect that to happen this year. Macros have re-stabilized. Again, if you are to look at the performance of shilling against major currencies, it's now very stable. So we don't expect volatility in forex. Yes. So if we control our underwriting, which we are doing, and investment income, and we don't have any volatility in forex, we expect a better performance.
I want to hear this from you. I mean, when you look at, when you move to the global geopolitical stage, you're having serious civil unrest in the United States. Yeah. You are having a conflict between Russia and Ukraine. Well, that has been happening for the last 3 years. Yeah. Then in Africa, you see what's happening in DRC, Congo, Rwanda, and some extent Burundi. And again, you see what's happening in Middle East, where you have Israel and Palestinians, having conflict. Is this having any major bearing on your business?
Yes. And this is a very interesting discussion on the risk, okay, and typical risk management. So what is happening is actually presenting a risk and opportunity to us, okay? So for the first time, we have seen a spike, okay, in what we call political violence and terrorism cover. Yeah. People are getting interested in protecting their business, okay? This is especially after what transpired last year, okay? People had very remote idea that we can have country-wide chaos that can affect your business in multiple locations. It happened, okay? And after the Gen Z protest here at home, we have seen an interest in that line, okay? And of course, all these chaos globally are also making people aware that you need to actually protect your business against that. Okay. However, this is also disrupting supply chain. And with that, you can see a lot of what we call hardening of rates. Because as I said, what is beyond us, okay, we also place externally. We seek protection from bigger brothers, retrocessionaires. So you have global reinsurance market with rates that are now hardening because of this. Okay? So you find what was cheaply available is now coming at a risk premium because the risk has already materialized. So there are 2 aspects with it. There is an upside and a downside. But again, we are in that game. And we are in this game for long, having been in it for 55 years.
Very well.
Yes.
Another thing that is really shaping and disrupting the market is the artificial intelligence. Yeah. How prepared are you to adopt, AI in your day-to-day business, and how have you been disrupted?
A very good observation again. And I'll tell you, at Kenya Re, we always try to be ahead of the pack, always, okay? And that will inform the future of Kenya Re. It's about constant innovation, okay? And a constant adoption of newer innovations, be it technological, product or process, okay? Now, AI has been around for many years, okay? Personally, I've been familiar with AI for more than 20 years because I did that in campus. I'm a computer scientist, okay? And when we see AI now getting assimilated into African business landscape, it's quite interesting. It's like moving from theory that I learned in school to seeing it now coming to reality. So at Kenya Re, we have embraced AI. We already have it. If you follow our social media activities last year, you may have seen we did a hackathon, okay, where we brought over 43 universities. These are very brilliant IT specialists that were to compete on some problems that we have given them. Okay? And out of that, we are trying to test the solutions around AI. So the AI at Kenya Re is mainly applied for now customer experience. Last year, again, we had a major event. This is a CEO event, CEO Summit, where we hosted over 350 CEOs from over 38 countries. 50 of them were from the local market. And during that event, we launched a chatbot. Okay? Meaning we have created a thin layer of AI above our customer relationship management. We have also created a thin layer of AI above our data analytics. Okay? And this is just to inform our decision. So the essence here is to almost tailor-make the customer experience to a personal level, in a way that when you deal with us, you may feel like you are the only person we are serving.
Very well.
Okay.
In the interest of time, we have to come to the end, but I know before we get to hear your final remarks.
Mine is to tell the public to invest in Kenya Re. Okay? And this is mainly informed by the fact that our share is highly discounted. If you look at how we traded yesterday, this should have been at around 1.85 shillings. Okay? If you do proper valuation of that share, okay, it will be oscillating between 7 to 10 shillings. This is the time to buy Kenya Re share, invest in Kenya Re. Okay? And the shares are available because last year we did a bonus issue. Okay? The essence of bonus issue was to raise $100 million for expansion, which now the shareholders gave us approval to tap into retained earnings to expand. So it is never too late to afford a shilling, below 2 shillings, to buy Kenya Re shares. As I've said, back to back, since 2007, every year, even during COVID, we have issued dividends. So buy the share, we are guaranteeing you dividends.
And by the way, in 30 seconds, do you feel it is high time that, the National Treasury created another divestiture plan, maybe to reduce its shareholding in Kenya Re by offering public more shares through an IPO?
We are at the disposal of the government. The decisions they can take, we don't disagree with them. We are here to serve the government of the day. So if that was to come, we will fully implement it.
Very good.
We will embrace that idea.
Asante.
Thank you.
Hilary Washinga.
Yes, that's
Thank you very much indeed for joining us tonight.
Thank you so much.
Very good. We've been talking to Hilary Washinga, the Managing Director, Kenya Reinsurance Corporation, of course, giving us an overview of how the market is performing in the future of the reinsurance business. Remember, this has been Inside Government. We do this every Wednesday from 8 to 9 p.m. with me, O'Brien Kimani, and of course with a repeat every Friday at 2:30 p.m. Well, thank you very much indeed for joining us. Doreen Arange is coming up next with the Prime Edition. And remember, of course, tomorrow is Budget Day, and we have rolled out a comprehensive coverage of the day's events. O'Brien Kimani is my name. Thank you.
In a world where news is ever-changing, staying informed is more important than ever.
Join us every week on News Check, your go-to show for the latest in current affairs, breaking news and in-depth analysis.
A warm welcome to KBC News Check.
From politics to global events, we bring you content that matter to you.
We're not just speaking about the governance and how we want to see it, but want to actually participate.
Get your facts, hear from the experts, and really understand what is happening around you.
We need to change our system first.
You have to do the impossible to make sure the message is home.
Stay ahead, stay informed, stay engaged.
Will these people, everybody agree?
Just listen to me.
Let's give him a chance to clear the air.
Catch News Check every Tuesday and Wednesday from 10 a.m. to 12 noon. Only on KBC Channel 1.
Friday night again.
Greetings in the name of the Most High, Jah Rastafari. My good name is Marley Moses, the positive warrior, alongside.
Yes, sir, DJ D-Rage, the